Good morning, my fellow students. This video is for those that are about to do WAEC in account. This question based on account, and for those that want to do account in WAEC 2020. I discovered that most students are always afraid of account when it comes to the aspect of calculation. So you know that this WAEC, this is how WAEC do set question. In the theory aspect, we have the one that you are going to just explain, list, and expatiate this and that. But the second aspect, which is the theory, we have section A, section and section B for theory. That section A is for the aspect I've mentioned down. The second aspect is for calculation. If you as a student, if you cannot calculate, we don't know how to calculate in account, hardly will you pass WAEC. So this video is just for the students that don't know how to calculate in account. So we are going to start from final account, showing adjustment. We are going to start from final account, and this final account that we are going to start from is just the root of financial accounting. If you understand this root, so we'll now move to the next one, which is end of the year adjustment. That question will come out from in WAEC. So if you don't know the aspects of end of the year adjustment, from this video that we're going to do here now, you are going to understand. By the time you finish watching the video, I believe that you can understand what I'm really talking about and what account is all about. You understand now? So in this video now, we're going to discuss on final account showing adjustment. We're talking of final account. The final account are the trading, profit and loss account, and balance sheet. So if you as a student, if you can do this, the remaining final account will be very easy for you to do, like adjustment, partnership, all those ones, you will be able to do it. You understand now? So I'm going to explain the format of final account. If you understand the format, once you understand the format, you'll be able to move to the next one, which is the end of the year adjustment, where you are going to do some adjustment at the end of the accounting period, which we have additional information. You understand? So these are the things we are going to focus more on, because I discovered that the WAEC do set question on that, and if you as a student, if you don't know this aspect, there's no how you can pass account. So once you are able to know this now, it's very simple for you to do other aspect of account. Just know the principle of the account. Just know the workings. Once you know the workings, it's very easy for you to do the remaining one. You understand? So this is the final account showing adjustment. This is a final account showing adjustment. We have trading, profit and loss account as at 31st December 2020. Now, if you want to answer question on that, the first thing you're going to write is that what you write the name of the organization or the name of the business. So once you have written the name of the owner of the business, now the second one you write what the name of the account. That's trading, profit and loss account as at 31st December 2020. On the left hand side, you can see the debit side, while on the right hand side you can see the credit side. And also don't forget the sign of currency, either it is in naira or in dollar or in pounds or in euro. Don't forget to write it there. And also we have opening stock. This opening stock, these are the stock that is available at the beginning of the accounting period. Now let's say for example you want to start selling books. You want to start selling books. Now let's say you have like 10 books that you have with you. You want to start selling it and you have 10 books. You know that 10 books will not be enough for you to sell. You have to get more of it. So let's say you go to the market and you bought what 50 cartons of books. You understand now? That 50 cartons of books that you bought from the market, you have to carry it from that 50 this thing that you bought, that 50 books that you bought is what we call purchases. You understand now? You purchase the book. The money that you use to carry the goods, the books from the supplier shop or from the market to your shop is what we call carriage inward. So that purchases and the carriage inward, you add it to what? To opening stock, which means that what? That your stock has what? Has increased. Maybe when you got to your shop, you discover that part of the goods are not okay. Let's say 2 cartons of the books are not okay. What will happen? You have to return it back to the supplier. That's what return outward. Returns outward. So when you return it back to the supplier, it will reduce the goods that is available. Now let's say you have 10 cartons of books as the opening stock, and you bought 50 cartons of books. So the money that you used to carry the books and the money that you paid for the books is what you call, when you add it together, when you less your returns outward, that is the goods that return back to the supplier. You return it back to the supplier. So it will reduce your what? The goods that is available that you want to sell now. It will reduce it. You understand? It will reduce it. Now let's say now you withdraw part of the books for your what? For your sons or maybe your relatives. You took part of the books to you give it to your relative to use. So that one will be classified as goods withdrawn. That you withdraw it. We're talking of withdraw. That will be how we call drawing. You can call it drawing, or you call it what? Goods withdraw. You withdraw it for what? For personal use. So when you less that one, you get your what? Your cost of goods available for sales. That is what? The one that is available. When you deduct the one that is not good, you return it back to the supplier, and also the one that you purchase and the one that you return. So you less it from that, and you get your what? Your goods available. So the next one, when after that, maybe you have sold goods, you have sold this and that, it remain. The one that remain is the closing stock. That is the stock that remain at the end of the accounting period is the closing stock. So now, when you less the closing stock from the goods that is available, you get what we call cost of goods sold. That is, you determine the one that you have sold. You understand now? You determine the one that you have sold. Now, when you sell the goods, this is the sales. This is the amount of money that you're able to receive from the sales of the goods. Now, out of the goods that you sold, one of your customers return it back to you. It has become returns inward to you. So you have to less it from the amount that you sold. You less it. When you less it, you get what we call net sales. This is what we call net sales. Net sales. When you less it, you get what? You get this. Let's say you get this. Just cancel this one. You understand? So that you understand it. So this is what? Your net sales. Since this is your net sales, we know you less it from this, you get what? You get this, which is the net sales. So after that, you want to get what? The gross profit. Now, if you want to get the gross profit, that is what? Net sales minus cost of goods sold. You get what? Your gross profit. That's the profit. When you have what? Gross profit carried down here. We have carried down. We have gross profit brought down. You understand now? For every credit entry, there must be a corresponding. For every debit entry, there must be a corresponding credit entry. So that's for that. That's how to get what? Gross profit. This one is what we call trading aspect. That's a trading account. The other one, which is for what? The expenses. On the debit side, you can see the expenses side. We have depreciation of assets. We have telephone. We have carried out work. We have lighting. We have bad debt. We have increase in provision for doubtful debt. These are what? Expenses. That is the money that you spend. The money that you spend in what? In the accounting period. That's what? These are the money that you spend in the accounting period. On the debit side, the expenses always be on the debit side, while the income will be on the credit side. That is the amount that you receive. Amount of your income, amount that you receive will be on the credit side. Now we have on the credit side we have gross profit brought down. We have discount received. That's the discount that you receive from the supplier, the person that you bought the books from. So the discount that you receive. We have reduction in provision for doubtful debt. I'm talking of provision for doubtful debt. This debt, it is likely you collect it, but you are still doubting either you will collect it or not. You understand now? So if you collect the provision for doubtful, if you collect the doubtful debt, so there will be reduction in the provision for doubtful debt, and we have what? Income. So these are the profit aspect. So now, when you add all this one together, let's focus on the expenses now. When you add all these expenses together, you get this. You understand? When you add everything together, you get what? This income side, when you add it together, when you add it together, the difference between this side and this side will determine if you are making profit or loss. Now, let's say for example now, this side is 2,000 naira. Let's assume it is what? 2,000 naira. And this side is 1,000 naira. 1,000 naira, which means that what? You have made profit. That is, the credit side is greater than the debit side. You call it what? Net profit. That's your net profit. You understand now? Now let's assume that this side is 3,000 naira and this side is 2,000 naira. So it means you are what? You have made loss. That is, the expensive side is greater than the income side. That is what you call it what? Net loss. If it is net loss, you go to this place, you write what? Net loss. You understand now? That is all for trading profit and loss account. So trading profit and loss account. So now we move to what? Balance sheet. After that, you move to what? Balance sheet. This is the balance sheet. We have balance sheet at 31st December 2020. Don't forget to write the what? The year given to you. We have capital. That is what? The money that you used to start the business. So we have add net profit. That is the profit you made on the business. So if there's any drawing, that is, if you withdraw any goods or money, it can be money or it can be goods. That is, once it is withdrawn from the business for personal use, it is what we call what? Drawing. So you can less it. When you less it from that, you get this. So after that, when you calculate, when you add this one, add this capital plus net profit minus drawing, you get what? You get this. That is this capital. When you add net profit and you deduct drawing, you get what? You get this. You understand now? So the next one, this balance sheet, we also have what? Current liabilities. Current liabilities, these are prepaid income. They are what? Is a liability. I'm talking of prepaid income. That is, these are the money that you have received, but you have not rendered the service. You've received the money, but you have not rendered the service. If maybe one of your customers want to buy goods from you, maybe the person is not around, and just pay the money in advance. Just pay the money, you have received the money in advance. That's what? Prepaid income. We have creditors. That's what? These are your suppliers. Those that supply you goods on credit. We have overdraft, when you withdraw more than what you have in the bank. So we also have what? Accrued expenses. Anywhere you hear accrued means owing. It means owing. You understand? These are what? Expenses. That is, these are the expenses that you are owing. All this one, they are classified as current liability. So the liability aspect now, we have current liability, we have long-term liability. The long-term liability, we have loan. You understand? They are what? Long-term liability. So we move to the what? To the credit side, which is what? Asset side. We have the asset side is divided into two. We have fixed asset and current asset. The fixed asset now, these are the assets that are fixed. It cannot change its form. Like land and building. Land and building does not change, but what? They can depreciate. So that is, the value of the asset can reduce. You understand? When you less it, this land and building, when you less depreciation, you get this. So this one are what? Equipment and what? Motor van. All this one, they don't have a depreciation. In some questions, they can give you depreciation on that. You understand now? So when you have depreciation on that, you do the same thing, less depreciation and get what? Net asset. You understand? Which is this. So now move to what? Current asset. These are stock. That's what? Goods. That one can change its form. It can change, like goods. Now this one is stock. You can call it goods. Now when you sell the goods, you can use the money to you can use the money, either you sell it on credit, which is when you sell it on credit, these are people owing you, they are your debtors. So the stock can change to debtors. When they pay you, either they pay you through bank or through cash. When they pay you through cash, it's you are receiving, that's your cash. So when they pay you, if they are paying by check, that's the bank, that is, this is the amount of money that you have in the bank, and this one is the amount of money that you have at hand. So you have less provision for bad debt. You less it from from debtors. When you less it from debtors, you get this. So now you want to collect everything together. Now you add this one, which is the net land and building. You add it with equipment, add it with motor van, stock, the net debtors. This is the net debtors. So you add it to bank, also add it to cash. You get this. And also you add all your liability. These are all your liability, and this is your liability. When you add it together, you get this. Thank you. So thank you for watching this video, and just make sure you subscribe to the video. If the video is profitable, make sure you subscribe. If you have gained a lot of things from this video, make sure you subscribe. And the next video is going to be on end of the year adjustment. That's how to calculate. So we are going to discuss on how to calculate, how to do the workings on that. So this one that we just did is just to explain the format. So the next video is going to be on what's it called, on the explanation, the example of that. So thank you. The major things for you to do is just to give a life to Jesus Christ. Jesus Christ is the way, because it's the only one that can give you wisdom. He said, if anyone lacks wisdom, he said, let him ask for the for God that giveth wisdom. Thank you.